Making money betting against the stock market is hard. If you look at the S&P 500 index, it's pretty much gone up forever. Stocks generally go up, but not all of them. And if you are ignoring the opportunity to bet against weak stocks, you're really missing out on half the opportunity to make money in the stock market. So in today's video, we are going to talk about and potentially even build a couple of shorting strategies. Let's talk about what's going on the chart behind me here, because as you probably noticed, the strategy I'm running is up $1.2 million on this chart, and I currently have the strategy running $50,000 positions. Turning $50,000 into over 1.2 million sounds pretty nice, doesn't it? Well, that's what this strategy is capable of doing on extremely volatile stocks like Novavax. What Novavax is, this was one of the companies that was creating COVID vaccines, right? So it went extremely bullish during COVID. And then, of course, once all the vaccines were administered, I don't even know if Novavax actually got theirs to go public. I don't know the exact story, but whatever happened, once COVID and lockdown sort of went away, this stock fell all the way back off. So this strategy crushed the bull move on this trade. It made over 1,700% on the way up, and then it immediately flips into a short position and it makes 90% on the way down. And guess what? I don't even have this strategy set up to compound the position size. So really, if you made 1,700%, you could then take that position size, add what you just made to your total position size into this short. You would be up even way more money. Anyway, let's stop fantasizing and let's talk about what the strategy is actually doing. This is a simple moving average crossover strategy that I have set up to essentially always be in a trade. When the smaller moving average crosses above the longer moving average, the strategy is entering long. When the smaller moving average crosses below the longer moving average, the strategy is entering short. So this strategy is always in a position. It is always looking to capitalize on bull moves and bear moves. And this strategy has a lot of fun input parameters that I have built into it. First off, you can easily adjust your position size directly from here without having to hop into the source code itself. Second off, you can set the lengths of the moving averages right here that easily so that you can find what fits your trade style and your trade goals the best. Next, if you would like to try different moving average types rather than just simple, you can adjust that. If you want to run this strategy as a day trading strategy, which I'll showcase here in just a minute, you can flip this to yes. And if you would like the strategy to only long, which kind of goes against the whole purpose of this video, but you can set up the strategy to only long by turning off shorting. I want to take a look, however, at only shorting with this strategy. This video, should I say, is all about finding the right kind of stocks to bet against and being able to capitalize on their setup. So if I come down here to the orders tab of this code, I can change the buy order to only be a to close order. This just means that when the buy setup is correct, it will never enter long. It will only utilize that buy setup, being the faster moving average crosses above the slower, as a reason to cover a short. So it will no longer enter long positions. As you can see here, the AMC long trade has gone away. It is only entering now this short trade, and we can see the statistics of that. If you're interested in this code and its customability so that you can set it up to find what works best for you, you can access this code along with over 80 other codified strategies, studies, scanners, etc., all on my website, daytradingstrategies.net. Click on our codes, get signed up today, and in ThinkorSwim, here are all the codes you can access. If I come into studies, just to show you how easy it is to import, every single one of my codes comes with a share link like this. All you need to do, copy that share link, set up in the top right of your ThinkorSwim application, open shared item, paste in that URL, preview, and import, and I now have this study available from my edit studies modal, and I turn it on just like I would any other. Type in DTS, that's where I prefix all my codes with so that they are easy to find for you. Double click, apply, that custom code is now running on your chart. Daytradingstrategies.net, link in the description down below. Go check it out, read the reviews, check the price, see if it's something that could help accelerate your trading journey. And back to the Novavax chart, which is what we started on with this video. Of course, only shorting. Here are the statistics. A fun chart I actually came across is Nvidia. This chart is obviously ridiculously bullish, and our short-only strategy is still actually up money. Now, it's only up $200. It's not up a lot of money. Of course, you are looking for long capitalization on this stock, but it's nice to see that even on a ridiculously strong stock, this short strategy doesn't get mutilated, right? Because that's why a lot of beginner traders hate shorting, because they see that the potential loss of shorting is infinite. Because a stock, okay, let me say it this way. If you're in a long position, a stock can only go to zero. So you can only lose what you have initially invested. Unless you're using margin, that's a whole different conversation. Just don't do that if you're a beginner trader. Anyway, with a short, there is no upper limit. There is no ceiling. A stock can go to infinity. So a lot of beginner traders just want to avoid shorting because they're scared of that scenario. Couple of things. One, set tight stops and follow those stops, which this strategy has built in. And two, just short the right kind of stuff, right? Like short big names, short high market cap, high float, high supply companies. They're not going, like Nvidia, I hate to tell you this, any longs out there that really love Nvidia, it is never going to double in price overnight. That's never going to happen. The stock is way too big. It's got way too much market cap. It's essentially, I won't say literally, it's essentially impossible for this thing to double overnight, which is what it would have to do in order for you to lose more than your initial investment. So just avoid shorting the very low float stuff, because those can and often do double, triple, quadruple, pentuple overnight, right? Those can go absolutely insane, and beginner traders see people get blown up on those and go, oh, I'll never short stocks. Just don't touch those, right? Let's look at another one. I know AMD is getting a little hammered lately. Yeah, I mean, look, this is a stock that over the last, since 2018, should I say, is up over 1,400%. Yet our short strategy is still profitable on it. So that's nice to see, right? And I just want to reiterate about this strategy before we move on to building a scanner so that you can find these short setups, that this strategy is actually better than what you're seeing on the chart right now. Remember, we have turned this to only short sell, whereas the strategy is built to both long and short. Just want to reiterate that. Don't give the strategy a sour taste in your mouth before we move on. We were just testing the short selling side of it there. All right. Let's go build a scanner. All right, so over on the scan tab within ThinkorSwim now, and starting with a blank slate, we are going to begin to build out a scanner to help you find not only the short setup, but also the right types of stocks to be shorting. And let's start with that latter statement there by adding a stock filter, and I'm going to add a shares filter, and I'm going to set my minimum shares to 50 million. 1, 2, 3, 1, 2, 3. This will get us above any of the extremely low float stuff, any of the stuff with a very small supply. The basic laws of supply and demand. If a object, if anything, has more demand than it has supply, the price of that is going to go up. Those laws of supply and demand apply to the stock market very much so as well. So if you have these stocks with very low supply, they can get extremely volatile because it takes less demand to move them. And we don't necessarily want to avoid all volatility, right? But we don't want to be getting in those, 10 million or less float stocks that can absolutely easily double, triple overnight and really blow us up. So set a minimum shares to 50 million. Of course, feel free to set this to whatever number you're comfortable with. This is what I'm going to start with for our scanner today. Next, we're going to load in another stock filter, and this time we're going to be looking at a minimum volume amount. This is a filter I put on almost every single one of my scanners. I'm going to look at a minimum volume of 1 million. So 1, 2, 3, 1, 2, 3. This is just, hey, I want to avoid all the low volume crap. I don't want awful bid-ask spreads. I don't want to end up getting stuck in trades because I have no volume to exit into. Just always try to avoid very low volume stocks when actively trading. Now I'm going to go ahead and run this scanner and look at our number of results, over 1,400, and these are all the types of stocks we want to be looking to short. These are the types of stocks that aren't likely to double overnight and really blow us up. They're going to move, they might be volatile, but they're not going to be so volatile that we can't get stopped out of our position where we want to control our losses on our shorting, just like we control our losses on our longing. You can control your losses the same way, once again, as long as you're trading the right kind of stocks. We've got Intel on the list. We've got JD on the list. We've got NU. We've got Nikola. We've got Cisco. These are all like companies you've heard of and maybe even traded before, right? These are very well-known names, not the building radar detectors out of their mom's shed in the backyard type stocks that if they get a random pump from a Wolf of Wall Street type guy, can triple overnight. So now the meat and potatoes of this scanner, we need to build in a filter to capture our moving average crossover. We want to see stocks where the moving average lengths that we have decided work best for us, remember, in our testing of our strategy. Remember, you can adjust the moving average lengths and type from the strategy yourself. That's what I would expect you to do. Run this testing, find the numbers that work best for you. I'm going to use simple moving averages of lengths 50 and 200. That's what I like. That's what fits my trading goals. Those might not be the right numbers for you. That's why I put the input parameters in the strategy, right? But anyway, we're going to come back to our scanner. We're going to add a third filter. This time, instead of stock, we are going to add a study filter, and we are going to click on the pencil of that filter, and we will hop into edit of the condition wizard. This pop-up modal here is a comparison equation, right? You have your left side condition, your comparator, and your right side condition. So what we want to do is simple moving average compared to simple moving average. To do that, I'm going to click on this top drop down. A simple moving average is a study within ThinkorSwim. I'm going to look up simple moving average. There it is. I will set this left side to my shorter length being 50. Now, instead of, and this is pretty important, instead here of saying is greater than, I'm going to say crosses above. And the difference there is that means that the cross is happening on today's candle. I only want to see stocks returned on this scan where the cross is happening today. Also, I should say crosses below. I've forgotten my own head we're building a short strategy, but you know what I mean. I want to see stocks on the scanner where the cross is happening today, as those are going to be the setups today that I'm going to want to take a look at, see if they match maybe my other trading rules for a potential short entrance. So on this right side, of course, we also look up a study. We look up simple moving average again, and I am going to use length of 200 once again, because I found those to be the lengths that work best for my trading goals. Save this, hit OK. I'm going to go ahead and run this scanner. We're going to drop from 1,400 results. We actually drop all the way down to only one. There is only one result in which this cross is happening on today's candle currently. That is UROY. If I click over into the stock, you can indeed see that the 50 moving average is today crossing below the 200 moving average. And now this, of course, will update every single day. So what you would do is about 10 minutes before market close, you would run a scanner like this, and you would see what stocks are potentially setting up for short entrances on the day. Now, a really beautiful thing about running the strategy code on your chart and receiving these sort of backtest statistics. I can see on this stock this strategy hasn't worked very well. The strategy has lost money on this stock. It's just not really been a stock that has a past history of follow through on moves, which is what a moving average crossover strategy needs, right? A moving average crossover strategy needs follow through on the moves. It needs stocks that are bullish or bearish in a direction. When stocks have a history of chopping sideways like this, it's not going to work very well. So I can immediately see this stock on my scanner, load it up on my chart, see that the strategy doesn't perform well. And I would likely, I'm not telling you what to do, you have to make your own trade decisions, but I would likely not enter this thing short. It doesn't have a positive winning history with the strategy. Why would I expect that to change now? And that's a great thing. This is not like a knock on the strategy that it's lost money on this stock. A strategy is never, ever going to make money on every single chart setup. Strategies are built to take advantage of specific market conditions and to hopefully survive in other market conditions. You can at least see that on this stock, it took its first trade in 2022. It's down $34,000 on these trades. If I go look at a stock like Nvidia since 2022, we were up 672,000. We are now up, what are we up? Over 970,000. It's up like 300 grand in the last 2 years on Nvidia. So it is doing okay, right? It is striving in the market setups that it is meant to trade more than it is failing in the market setups that it's not meant to trade. Once again, that's always going to be true. And once again, running the strategy on the chart like this helps you to immediately see, hey, this thing is not the right market strategy. The strategy does not have a winning history. Let's just avoid this trade setup. So remember, if you're interested in the strategy code you've seen today or over 80 plus other codes, including this backtest data statistics study you've been seeing in the top left, this will save you hundreds of hours of time while building strategies. They're all available for one low price over on my website, daytradingstrategies.net, linked in the description down below. Sign up today and become a better trader. With all that being said, hit like if you've enjoyed the video, subscribe if you would like to continue learning, and I will catch you on the next one.